Okay, so recently, just a few days ago, some AI stocks are declining quite a bit, and people are like, "Oh my God, AI bubble! It's crashing!" All this stuff. And some of the stocks that are hit the hardest was, for example, Palantir in my portfolio. Palantir, SoundHound AI, maybe CrowdStrike. So these stocks dropped. Oh, let me switch here to the charts. So Palantir, for example, dropped like 15%, which is not too little. But remember that back in February, Palantir dropped like 30%, 35%, in fact. And people were not like, it was not the end of the world, right? Now people are speculating, oh my God, AI bubble and so on. Is the AI bubble going to burst? And I'm going to tell you what I think about it. So I think we can divide AI stocks into three different categories. You have manufacturers of hardware, and we are talking about TCMC, TSMC, sorry. We are talking about NVIDIA. We are talking about Intel, AMD. We are talking about Supermicro. We are talking about, let me check my portfolio. So there is many other Amcor, which is actually a manufacturer. They build the infrastructure. They build data centers. So we are talking about like here. These are stocks. These are companies that have build the infrastructure, build the hardware. Okay. Then you have the ones that own the infrastructure and the hardware. I'm talking about Microsoft with Microsoft Cloud, Amazon, Meta. They own the infrastructure and they manage this infrastructure. And for example, if you want to run an AI, you are most likely running it on Amazon or Google Cloud or Microsoft Azure Cloud. Okay, and then you have a third category of stocks that are like just software providers. Okay, and in this category we have like CrowdStrike, SoundHound AI, CrowdStrike, Palantir, of course. And these stocks are being hit the hardest by the recent market pullback. So there is a big difference, okay? Because when people compare like, oh, .com crash and AI is like exactly the same, the .com fever. No, it's not the same. First, during the .com crash, those companies, Pets.com and so on, there was so many companies with huge valuations and they had very little revenue, no positive income, no profits, margins totally suck. There's just bleeding money, okay? And most of these companies, AI companies, these big AI companies, including Palantir, CrowdStrike, and especially the ones that have the infrastructure, Amazon, Microsoft, Google, and the ones that manufacture the infrastructure and the hardware, NVIDIA, Amcor, TSMC, and so on, they have very good revenue. The revenue is growing like crazy. They have very good margins. The margins are very solid, and they are very profitable companies. So it's not the same as the .com. That's to start. And the margins actually of both the manufacturers and the owners of the data centers, the margins are increasing, which means that the business is going well for these companies. And the valuations might justify their stocks going up. Now, whether it justifies for stocks like Palantir to have the current valuation, I'm not so sure. Okay, I have bought Palantir years ago. My Palantir holdings are up over 2,000%, so I'm very happy. But if you ask me, like, look at these charts. So this is, let me remove here. So this is from early 2024, so from January to beginning of 2024 until now. Palantir is up over 800%. Is this fair or not? Well, maybe it's a bit overvalued. I'm not going to say that it's not overvalued, but no one really knows anyway. But the reality is that their business is growing. Now, it might deserve, yes, a pullback. It might deserve to come back a bit because like 800 something percent in 1.5 years, it's crazy and cannot go up forever like this, obviously. But whether is it like going to the AI starts going to implode and so on? I don't think so. Look, AI is pretty much everywhere. You open Google, AI is there. Everyone uses Google. Everyone uses ChatGPT. Everyone like at work, AI is pretty much everywhere, and I don't think is going. We are not going to put the genie inside the bottle again. So Sam Altman said a few days ago that most AI integrations in companies are kind of failing. Well, maybe they are not like at the same level of the expectations of management, but people, like everyone, is pretty much using AI, and I only see it growing in the future. Yeah, there will be market volatility for sure. I'm not all in into the AI space. I have maybe like 20-30% of my portfolio into AI stocks, including the ones that you see here on the screen, which is Palantir, CrowdStrike, Microsoft, Meta, Amazon, Nvidia, TSMC, SoundHound AI, Google. And if there is a market pullback, if there is a crash and so on, that might be a good opportunity to buy these stocks. Because look, I didn't buy them today. I bought these stocks, some of them many years ago. I've been holding Palantir for like 3 or 4 years, okay? And that's why my share on Palantir is up over 2,000%. But basically, this is just to say that no, we should not compare the AI frenzy to the .com one, because companies have growing revenues. They do have growing revenues. They do have growing income. They are profitable. They have good margins, growing margins. And this is very different from .com bubble and so on. So still, is there reason to worry? Well, the market might crash. No one can say it's not going to crash, but I also see that, like, if you have invested, if you have invested in Amazon or Microsoft at the top of the .com bubble, you'll still be doing very well. Okay. So what I'm saying is that, yeah, we should continue doing some investments in this space. And if there is a crash, I will continue dollar cost averaging. And 10 years later, we'll be fine. One of the ways I invest in tech stocks is not only my direct investment in these stocks, but also ETFs and leverage ETFs. So I really like QQQ, which is the NASDAQ, the biggest NASDAQ ETF. I like S&P 500 ETFs, of course, which also include all these companies that I was talking about. And then I also like leveraged ETFs, such as QLD, which is 2x NASDAQ, Triple Q, which is 3x NASDAQ. And why do I invest in leverage ETFs? Well, because it helps you maximizing risk-adjusted returns. So the returns that you get for the amount of risk that you are incurring in investing in leverage ETFs is very, very good, okay? Now, you should only put a very small percentage of your portfolio into leverage ETFs. Don't go all in, because they are extremely volatile. The same way you multiply the returns, the daily returns of the index. So if NASDAQ goes up 2% in one day, your ETF will go up 6% on the case of the Triple Q, for example. But the volatility is also multiplied. So if it goes down 3x. But this is why I read this book. And I read everything about leverage ETFs. This book is not about leverage ETFs. This is about Kelly criterion, which means basically how much you should allocate to a certain investment. But yeah, in a nutshell, this is what I'm doing to get the exposure to the AI revolution, to the tech revolution. I even have created a course about leverage ETFs, and on my Be Limitless community, you can find the course as well as all my stock recommendations and crypto recommendations. I will leave the link in the description of the video. All right, if you enjoyed this video, give it a like and subscribe, and I'll see you in the next one.